Fotis, good morning.
Morning, James. Morning, Andrew. Nice to be talking to you and your viewers and listeners today.
Thank you very much for doing this. I think it's the first time we've had Impax environmental markets on, actually. So, as per usual, could you just sort of run us through the case for the fund, please?
Yes, absolutely. So maybe starting with slide 2, just a quick word on who Impax is. So Impax is a specialist asset manager, has been around for about 25 years, and it's really focusing on investment opportunities arising from the transition to a more sustainable economy. We started in the UK. Today we have presence in Europe, US, and Asia, and we have an investment team of more than 80 people. So large dedicated resource looking at this theme, this transition and related opportunities. So if we go to slide 3, just to give an introduction on Impax environmental markets, on IEM. So this is a trust that is investing in global small and mid-cap companies that are active in environmental markets. So essentially focusing on pure play solution providers to environmental problems, solutions that allow a more efficient delivery of basic needs in the society. We think this is a part of the market that has been enjoying superior growth, and the long-term investment thesis has only become stronger over the years. I mean, going back, it was reinforced with the introduction of net zero targets. Then we had the COVID crisis, which highlighted the need to manage systemic risks like climate change. And then last year, of course, the energy crisis, which really accelerated decarbonization across a wide range of end markets. So the thesis is becoming stronger. In terms of companies in the trust, they need to be, as I said, pure play. So they need to have at least 50% of their revenues coming from environmental markets. 50% is the minimum. The actual across the portfolio is closer to 80%. So real focus on the pure play companies. As you can see on the right-hand side of this slide, we are well diversified across the different themes within environmental markets, and I'll talk more about that in a bit. And then what you're getting with IEM in terms of styles is definitely exposure to smaller and medium-sized companies, exposure to growth as a style, and a general cyclical bias, but with a balance between cyclicals and defensives. And then final point, of course, we do focus on proven profitable companies, so we don't have exposure to sort of the hyper growth style. Obviously, the past year and a half have been tricky for growth as a style and for smaller and medium companies. So after the growth to value rotation last year and the underperformance of smaller companies this year, the portfolio has derated significantly, I would say, and is trading at a valuation which is in line with the very long-term average, despite the investment thesis having become stronger. And then final point on this slide that I would make is, obviously having been active in issuing shares when the trust was trading at a premium, now that a discount to NAV has emerged, the board has been active in buying back shares. So there is a stated intention to keep the trust close to NAV during normal market conditions. Excuse me. If we go to the next slide, thank you very much. So here you can see the team that manages IEM. So, I joined Impax in January 2015 after finishing a master's in electrical engineering and renewable energy. Bruce and John have been at Impax pretty much since day one. So the three of us are the co-PMs, very stable portfolio management team. And then beyond us, you can see, we have Evie Patterson in the portfolio team, an analyst that brings in some broader sustainability expertise. We have Justin Winter, who is a real specialist in water-related investment opportunities, and Lisa Bovilan, our head of stewardship and sustainability, and Simon Higo, our head of investment risk, who act as sounding boards for the team. Final point here, beyond the people you see on this slide, of course, there is a wider Impax team. So again, a very stable team. We have been, growing as a resource over time, and all these people feed ideas into IAM. If we go to the next slide, thank you. So here you can see the basic hypothesis that underpins all of the impact strategies. So as I said, we believe that the economy is in transition from a depletive economic model to a more sustainable way of doing things. A lot of drivers sort of supporting and underpinning this transition. Technological costs are coming down, so they enable a better way of doing things. Consumers are changing their preferences, and quite interestingly, policy has been, a constant support for these markets. And even in the past 18 months, with so much sort of other things going on in the macro landscape, we have seen continued policy support. So this thesis underpins the basic sort of investment hypothesis behind IAM and all strategies at Impax. If we go to the next slide, thank you. You can see some examples of how this transition is translated in different sectors. And the message here is that IAM is really benefiting from these transitions and focusing on the winners and avoiding the losers on the left of this slide. Let's go to the next slide, please. So this is a slide I'd like to spend a bit of time on. This is the opportunity set for IAM, our environmental markets taxonomy, so pretty critical. So my first point on this slide is that environmental markets is a very dynamic and evolving opportunity set. So there is a lot of innovation, new technologies that come up. So the fact that we have been doing this for almost 25 years, I think does set us apart. We have a lot of experience in classifying environmental markets, understanding what's in and what's out, and staying on top of the changes. And we also have a long-standing partnership with Fotis, where we helped them develop their environmental market indices. So if we just talk about the 6 boxes you see here, the 6 sectors within environmental markets, the first one is energy. So this sector covers how we generate renewable energy and how we can reduce our energy consumption and sort of be more efficient. There are all sorts of forecasts out there, and whichever you look at, the conclusion is that we are in a process of a massive decarbonization, reducing our reliance on fossil fuels, looking to be more efficient in how we use energy. So on the generation side, we have technologies like wind, solar, hydro, also hydrogen, and we include the developers and also the companies in the value chain that make the necessary equipment. In energy management and efficiency, we look at the electricity grid infrastructure, which also covers things like energy storage and batteries. And also we look at how can we save energy across end markets like buildings with insulation panels, heat pumps, efficient air conditioning, efficient lighting, just some examples there, but also industry with factory automation, with robotics, a lot of interesting technologies there as well. So that was energy. Then the second sector is called clean and efficient transport. So transport accounts for, I think, about 20% of global carbon emissions, but it's also responsible for a lot of air pollution in cities, which is increasingly highlighted as a risk for public health. So what are we looking for here? We have solutions from public transportation and bicycles all the way to electric vehicles and sort of shared mobility business models. Then we have the water sector. About 40% of global population is affected by water scarcity, and this is only getting worse with climate change. It's obviously a massive issue. And we are investing in water treatment, water infrastructure, and also water utilities. Moving on, we have the circular economy, another pretty important issue out there. We feel this is an area that's not very well understood by the market, and we have actually been increasing our exposure to this space in the past few years. So the problem here, I would say, is pretty obvious. I mean, just to give you some stats, 98% of plastics today are not recycled. 33% of food is just thrown away. So we have this linear economy, which leads to a lot of wastage, a lot of pollution. In circular economy, we look at how products are being made, the potential, for example, to use biomaterials instead of petrochemical-based materials. We look at how products are being used during their lifetime, what resources are being consumed there. And finally, at the end of life stage, we include the waste infrastructure and recycling technologies that help us close the loop. Then we have sustainable food and agriculture. I mean, again, pretty impactful sector. Agriculture accounts for about 30% of global emissions, 70% of freshwater withdrawals. So again, very significant environmental impact that needs to be managed. At the same time, as I was saying before, consumers are changing their preferences. They're becoming more and more conscious around the environmental footprint of the food products they consume. So what are the opportunities here? We look at solutions that improve agricultural productivity, so using less water, less fertilizers, having more software capabilities in agricultural machinery. We look for sustainably managed forests, which reduces land degradation. And finally, we look for organic and alternative food products that are less processed and typically use less inputs, less fertilizers. And then final box at the top right of this slide, smart environment. So here we recognize that the world is increasingly interconnected, technology dependent. So there is an opportunity to invest in software and technology solutions that will form the backbone of modern economies and enable a more efficient, less pollutive way of doing things. So just to give you a few examples here as well. First of all, we look at how we design products, what are the software tools we use. I mean, designing products is where everything starts from. There are all these studies out there suggesting that how you design a product is the single biggest determinant of the environmental footprint of that product during its lifetime. So quite a big opportunity. Then we focus on solutions around connected infrastructure, so things like remote operation and monitoring of assets, things like preventative maintenance. And then finally, we look at opportunities in the cloud infrastructure space. Cloud is what enables all of these other solutions, all of this connectivity, and also, a lot of opportunities around power management in data centers. So this is our environmental markets taxonomy. These are the types of sectors that we invest in. And just reiterating that for a company to get in IEM, it needs to have at least 50% of its revenues coming from one of these solutions. So if we go to the next slide, just this really quickly shows, what the fast growth we have seen in this opportunity set. So in the universe, we had about 250 companies above 50% exposure back in 2000. Today, we have more than 1,500 companies and a few trillions of market cap. So really broad and growing universe. If we then go to the next slide, you can see the long-term performance of IEM. So looking at over 5, 10, 3 years, pretty strong track record, I would say. Obviously, the past 18 months have been more tricky with the rotation from growth to value last year and the underperformance of smaller companies this year. Going to the next slide, this shows that, we do have this strong long-term track record. At the same time, there's a very strong positive environmental impact from the companies that IEM is investing in. So both in terms of emissions avoided, water treated, saved, clean water provided, renewable energy generated, and also waste recycled. I should emphasize that this is an output of our investments. So, from the very way we select companies, we know they will have a positive environmental impact, and this just communicates that impact. This is not something we're trying to optimize. We choose the best companies from an investment point of view, and this is just the impact they are delivering. Going on to slide 11. So this is how the portfolio looks like today. Just reiterating, at the top left, focus on small and medium-sized companies. You can see the weighted average market cap around $9 billion US dollars. At the top right, pretty well diversified in terms of regions. Bottom left, I talked before that we do have a small cyclical bias versus global markets, but definitely a lot of defensive opportunities in there as well. And we have actually been increasing our defensive exposure in the past 3 to 5 years, given the more fragile macroeconomic environment. And then finally, bottom right, in terms of sector exposure in sort of a more geeks lens, we do have quite a big exposure in industrials, which one would expect. A lot of our companies make products that solve environmental problems. So big exposure in industrials, but a lot of different underlying markets beneath that exposure. We have an overweight in utilities, which is mainly our exposure to renewable energy developers. And I would say, looking at how this graph has evolved over the long term, I would say a lot more information technology exposure, materials, even healthcare. So we are trying to find diversifying companies that still have strong environmental credentials. If we go on to the next slide, so this is the top 10 of IEM. I would say the common theme of these companies is generally resilient business models and reasonable valuation. So, just to give you a couple of examples, starting at the top, PTC is a software company making software for industrial markets. This is used to design products, going to the point I was making before about product design, but also monitoring them through their lifetime with what is called product lifecycle management, and with applications like preventative maintenance. We like PTC because it has a defensive business model, which is subscription-based, and also very low customer churn. The engineers that use this software usually stick with it for the length of their career. So pretty interesting company. Second one you see on this list, Clean Harbors, which does hazardous waste management in the US. So very strong environmental credentials, but also pretty attractive market because of its high barriers to entry. I mean, it's very, very difficult to get permits for new facilities like that in the US. So, Clean Harbors is definitely one of the leading companies there. And then maybe a final example that I would give is a bit further down the list, Northland Power, which is one of the biggest offshore wind developers globally. So very strong track record. At the moment, facing a few issues with capex inflation, which sort of is creating a bit of weakness in the sector, but longer term, it's a company that we think has a lot of structural drivers, given the ambitious targets for offshore wind around the world. And then just finishing off in the next slide, sort of looking a bit more, forward-looking in terms of valuation and outlook. Just returning to the point I made at the beginning, we have been through a period of pretty macro-driven markets. So we have had the rotation from growth to value last year and the weakness in small caps this year. So that has led to a significant derating in the portfolio. So as you can see here, trading in line with the long-term average, despite strengthening thesis that I was mentioning before, and despite a natural evolution in the portfolio. So I said about more software holdings, more healthcare opportunities, and these are sectors trading at higher multiples for good reasons. So notwithstanding that evolution, you can see the PE of the portfolio is in line with the historical average. And then, another big focus area for us is earnings growth. So we think earnings is a key driver of share prices over the long term. So very pleased to see, still quite a decent growth premium compared to global markets and equity, as we see on the left-hand side of this slide, in the bar chart. So I have spoken for a while. I will pause here and see if there are any questions.
There are some questions. Thank you very much, Fotis. That's interesting.